Hello, on behalf of Polar Capital, the board and the healthcare team would like to thank you for your interest in the Polar Capital Global Healthcare Trust, otherwise known as PCGH. Gareth and I, who manage the trust together, will talk you through the presentation that reflects on the financial year 2023, but more importantly touches on why we are so excited about the outlook for 2024 and beyond. After a challenging period on a relative basis, we believe the healthcare sector is set to recover and potentially outperform in 2024. And that view is based on an industry that's innovating and launching new product cycles that should drive revenue and earnings momentum, continued elevated levels of utilisation as patients engage with their physicians and the healthcare systems. Importantly, the sector feels very much out of favour, offering a near-term contrarian investment opportunity. And finally, PCGH is a high-conviction vehicle run by an experienced investment team and is currently trading at a discount to its NAV. The most important slide in the presentation is the team, one steeped with experience that hopefully will allow us to generate ideas, manage risk, and extract the best out of our interactions with companies, management teams, and industry-leading experts. Reflecting on the financial year 2023, and as a reminder, PCGH has a September year end, the strategy delivered 3% outperformance versus the benchmark in the year under review. Whilst pleasing to be ahead of the benchmark, 2023 was frustrating for healthcare investors on a relative basis, with stronger than expected economic growth favouring more cyclical areas of the market. 2023 also witnessed volatility with US Treasury yields, a situation that had a detrimental impact on high growth, high terminal value areas of the market, as illustrated by the downward pressure exerted on small and mid-cap stocks. Importantly, this volatility created some interesting medium-term, long-term investment opportunities that we hope to capture with PCGH. Taking a closer look at the drivers' performance in the financial year 2023, the strategy's overweight stance of biotechnology was positive, driven by both allocation and stock selection. We continue to be constructive on the subsector, one that is pushing the envelope with innovative solutions to target unmet medical needs. Healthcare equipment supplies was also a positive contributor, an area of the market that benefited from increased utilisation as more and more patients re-engage with healthcare systems following the COVID-19 related hiatus. For balance, healthcare distributors and life sciences tools and services were a drag on performance. Against a positive industry backdrop, the challenges with distributors were very much stock specific. By contrast, the challenges facing the life sciences subsector were industry-wide and included issues such as inventory drawdowns, slowing biopharma activity, and the macroeconomic climate in China. Looking at subsector positioning, you will see that it's pretty consistent across the period under review. We continue to be constructive on the biotechnology subsector, as mentioned previously, and are also constructive on facilities and supplies, both of which should benefit from elevated levels of patient demand. The underweight in pharmaceuticals remains, although it is worth noting that they do have strong defensive qualities and have hugely diverse growth outlooks, and continue to invest heavily in R&D. You will also notice that the cash position is negative, simply a reflection on the structural leverage in the form of zero dividend preference shares. The last slide in this section, before I hand over to Gareth for the outlook, offers more granularity on the geographic and market cap breakdown of the trust. The top left pie chart highlights one important metric, which is that PCGH does have a large cap bias, with nearly 1/3 of the assets in mega caps, as defined as having a market cap greater than $100 billion. You will also note that the trust, the majority of the assets in the US, a position that has been pretty consistent over the life of the trust. I will now pass to Gareth, who has the exciting job of talking about the future. Gareth, over to you.
Thanks, Jamie. So thinking about 2024 and beyond, we highlight the graphs shown of historical performance of healthcare going back a long way, back to the late 1980s. So the top chart is for the S&P 500 Healthcare Index, looking at absolute returns, and the bottom chart is the S&P 500 Healthcare Index again, but run on a relative basis versus the S&P 500, and both show very strong performance over the long term. What we'd highlight really is the pullback that we've seen after a really strong year of performance in recent history in 22, and then the underperformance in 23, and how we've pulled back to an upward sloping trend line, which for the period shown of 35 years or so, there's only been 7 occasions in that time where this has happened. So It's one of our reasons for being constructive for the time ahead in 24 and longer term. Looking at valuation, also reflecting on long-term historical multiples. Forward PE ratio shown here of S&P 500 healthcare again versus the broader S&P 500. We're sitting at between a 10 to 15% discount to the long-term average, which we see as a decent opportunity in terms of offering upside for healthcare. Reviewing the 6 major themes that we think are the most important of growth in healthcare, we have a particular focus for 24 and in the midterm on 2 particular themes, and they are innovation and emerging markets. On the innovation side, we're excited about new product cycles, which are critical to the growth of product companies. And on the emerging market side, increasing demand for healthcare, leading to very strong growth. Note also a very topical area, which is around the use of artificial intelligence, or AI. We think this can be really important in driving greater automation and efficiency within the healthcare system and can be very important for the growth of the sector. Expanding on these themes and first dealing with innovation, we've seen a record year of approvals for new products in the areas of obesity, Alzheimer's, cancer and respiratory disorders, among others. Also, we've seen numerous cancer products be developed and approved and launched over the last decade, and the learnings from the development and the science of those cancer and those products is now being applied to central nervous system disorders, where we see a significant unmet need. And lastly, new technologies are being advanced, including cell therapies, antibody drug conjugates, and gene therapies, which have significant potential to shift our thinking about drug development and cures, which we're very excited about. On emerging markets, there are 5 billion people looking for better access to healthcare as incomes and wealth improve over time. Current spending is largely out of pocket, so in the future we look to greater insurance coverage and government spending on healthcare to increase access. And to give an example of the contrast between developed market healthcare spending and emerging markets, on a per capita basis, the US spends 50 times more than India, which is an incredible statistic. And over time, we would expect some normalization with strong growth, obviously, in India. On artificial intelligence, healthcare is sadly very inefficient in how it's delivered, and also slow to adopt the use of new technologies, in part because of extensive regulation. We see healthcare as being a major beneficiary of automation through AI, the first examples being seen in diagnostics and image analysis. To finish, we are very optimistic for healthcare in 2024. We think valuations are attractive, fundamentals robust, particularly in regard to strong utilization and new product cycles. We expect to see further consolidation within the sector over the next year or two. And lastly, we'd flag that ETF flows are very negative currently, and that tends to be a great contrary buy indicator for the sector. We feel that PCGH continues to be an exciting way to invest in the sector. Thanks for listening, and please feel free to email with any questions for the managers or the board to the address cosec@polarcapital.co.uk.